I think there's a renewed institutional interest. I don't think institutions are immune to the same sort of human behavior that we are as individual investors. I think the fear of missing out. It's up 82% since December. Still down 50% from its high. That's a nice combination of characteristics for investors, particularly institutional investors, understand the potentiality of it. So I think institutional money is starting to come in, and I think a lot of family office and private wealth money is coming back into it.
For a while, the Bitcoin proponents were arguing that it was an inflation hedge. It was something good to buy in an inflationary environment. Does that argument still stand? Is that something that's circulating as part of the bullish narrative on Bitcoin?
Look, I think one of the problems was that there was a lot of prognosis about the characteristics of Bitcoin early on without a lot of data points, right? And I think what makes me enthusiastic about what we're seeing in these markets is the more data points we have, the more reactions we see to the market in Bitcoin, the more we can sort of statistically look at how Bitcoin behaves. And there was a lot of talk about its correlation to equity markets for a short period, but it was a very short data point. So I think this is to a certain degree, without overstating it, a validation that Bitcoin is certainly showing that it has some of the characteristics of a safe haven, of a digital gold. We hear that a lot, and it's also becoming, I think, a focal point for those that are concerned about the banking situation, particularly in the United States.
That's an interesting take, because you could also argue that it has bounced back alongside U.S. tech. Yes, we had the turmoil in the banking sector, so you could say that it was benefiting from safe haven demand, but it also has tended to move with U.S. tech pretty strongly.
Well, I think there's two potential reasons for that. One is the investors who are most knowledgeable about cryptocurrencies, digital assets, tend to be more tech savvy, because it is an asset class that is based on technology. I think, secondly, it highlights the importance of blockchain technology and how it is going to, sort of revolutionize the financial markets, but also lots of other industries too.
Let me ask you about the Ethereum Shanghai upgrade. Was it successful, and what's important to take away from it?
I think so. I think there's been a lot of focus on, the release of liquidity of Ethereum into the marketplace, and therefore should eventually drive down price. And there's a lot of debate about that. It hasn't happened. But I think the more important point is that I'm talking to lots of institutions that are, let's call them crypto interested, crypto curious, and one of the clear benefits of this whole thing is that there is now a clear liquidity profile for Ethereum. So they know where they can put it in their asset allocation and what kind of liquidity profile it has. And I think that's a hugely important characteristic coming out of this, and I think it will see the next foot drop with institutional investment into Ethereum.
Well, let me ask you about institutional interest in the whole crypto space, because you came from traditional asset management and you made this shift into the world of digital asset management and digital assets. I speak to a lot of institutional investors who are really skeptical about this space. What are you saying to those skeptics within the institutional investment community?
Well, what I'm saying to them is, it reminded me, the reason I got involved in it was, a light bulb went off at one point, and I saw a lot of similarities to the early days of, for example, hedge funds. When I got involved in hedge funds, there was a plethora of players, some of them not so good, some of them bad actors, some of them incompetent, and some of them really, really talented. And in the early stages, that's a natural characteristic of an early stage of a financial evolution in a market. And I think what we're seeing now is that weeding out. We're seeing a flight to quality. Wave itself has benefited a lot from being SEC regulated and having avoided all the pitfalls that we've seen happen in this industry. But I would caution people to remember one thing. Many of the crises that have happened in digital assets and crypto have been centralized businesses, not really blockchain-based businesses. They have been centralized lending platforms. So I think it remains a very, very solid thesis that blockchain and digital assets are here to stay, and will continue to grow and become institutionalized over time.